Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Also, I know Steve didn't mention this, but this actually will be recorded. So for those of you that have registered, you will get a link for the recording for this as well. So if you get lost or whatnot, don't worry about it because you'll be able to catch up later. So as I was saying, we're looking at equal move levels. And this is something that you don't really hear a lot about. But what it is that when you have a trend or directional move in a security, and you have a congestion or a correction, and then a continuation of that move. If you take the original move, looking at this prior low here to this high here, and then you take the start of the new continuation and just add on what that original move was. So here was A. So if we take A, lows to highs, measure that move, and then apply that to the low for the start of B, that gives you another type of target or resistance level. Now, momentum is going to be very, very important in determining whether or not that equal move actually holds. But you can see that in this case, that equal move corresponded almost to the T with that previous high. So you have not only the equal move, but you also have a previous high. And the more support and resistance levels you have taking place in one zone, the stronger that level is going to be. So if you have gap closures taking place at the same time as a whole number support, at the same time as previous highs or previous lows, that sort of thing, they're all going to be working together. And the more of them you have together, the more pros you have for your position. So if you're taking a reversal strategy and you're looking to short off of this high here, well, if you only had one type of resistance there, it's not going to be as strong of a reversal or as strong of a pro as if you would have additional types of resistance. So when you're looking at building strategies and how these things can impact the likelihood of success of the strategy, you're looking for these combinations. And adding more and more of these support and resistance levels is going to increase the odds of success of your strategy. Now, let's go on and look at the next building block, and that's going to be pace or momentum. And this is something where when I first started teaching this, literally you wouldn't find anybody else discussing this type of thing. This is a concept where it's really simple when you think about it, because you're just looking at how much time a move takes in a security as compared to a previous move. So let's say, for example, we have a rally that lasts about 30 minutes. But then there's a correction, and it takes back all of those gains in 10 minutes. Well, very simply put, the momentum or the pace of the sell-off is significantly stronger than the momentum or pace of that previous rally. And this is often one of the most important, if not the most important, determining factors of success on a strategy. And it's also one of the most overlooked. Like I said, until I started teaching it, I didn't know anybody else that did so. So it's very important, though. Well, you're going to see that here as we go and look through a lot of these charts. Here's a very basic template that shows you how momentum can shift based upon what comes before it. So if you have a gradual move to the downside, I'm going to actually switch back over here to the highlighter. And if we have a downside move such as A, this is not like the most gradual move, but it's slower than average. And when you're talking about slower than average, just go back in your charts and look at how price action has taken place in the past and kind of use that as a general judgment of what an average pace for a move is compared to previous moves. You can't certain degrees, meaning that a lot of people will say, oh, well, the degree of this slope is 30 degrees or something like that, because how you scale your charts is going to change how what that degree of that slope is. So you can't really do it that way at all. But you can look and see how it's changed and compared to previous moves in a security, and that's what we're seeing here. We had this kind of slower than average move for this pullback on A, which you can't actually tell is slower than average until you take it into account with everything else. But a slower than average move or correction is going to lead to a stronger counter move in most cases. So if we have a gradual pullback such as C, there's a higher chance you're going to see a sharper breakout coming out of that when that channel breaks. If the pace starts to shift, such as an E, that can lead to the more rapid corrective type of moves. Slower move again to the upside, this creates a trap, and this is something that's kind of like what we're seeing on the S&P 500 when you look at this on a weekly to monthly time frame. We are seeing this move to the slightly higher high that's taken place. And this type of action with a slower move will often lead to a faster move on the downside. And then you'll get a situation where if you've got a trading range form, like here, from I to L basically, I'm going to go ahead and clear this. But if we look at a trading range, whether this is one that's been forming for a long time or not, if you have a shift in the momentum within the range itself, where it starts to hug one end of that channel over another, the chances are substantially higher that you're going to get a really clean break of that trading range than if it moves from, say, the upper end of this channel and then tries to push all the way through it without pausing at the lower end. So that shift in momentum that takes place on K is a really strong heads up that you're going to see a breakdown coming out of this. Now, notice this formation here that we're seeing. This is a pattern that I call a two-wave continuation move. And this two-wave type of action is going to be sort of a theme for the rest of this presentation. We're going to be looking at how these two-wave moves form in a security and form in these FX options and will lead to really strong trading strategies and setups. So in this case, the two waves refers to the counter wave action. So I and K are our two waves. Basically, they're two waves of upside, followed by the continuation move on the downside marked L. In this case, it also happens to be part of a triangle. Now let's look at this as we go and put it into practice. And we'll see here how these momentum shifts will help actually impact the follow-through of a trade. So we have some pretty typical back and forth moves. Basically, we've got a trading channel forming. Now, as this shifts, I'm going to clear this, notice that we have the strongest upside move marked A. C, the momentum starts to slow just a little bit. E, it slows even further. This is showing us a change in the buying momentum of this entire trading range. So it's starting to begin to favor a breakdown, even though the counter moves here are also starting to shift and slow, because in F, it picks up again on the downside, whereas in here on E, it is still slowing on the upside. So we have this sort of change in the overall momentum that begins to confirm between E and F, and it further confirms with G, where it does that type of action where I drew it, had that trading range, hugged the lower end of the range, and then broke lower. So this can give you one type of short just as that congestion or such breaks lower. Now we'll look at some of the other setups that take place within this action here in a little bit, but this is just one of them coming out of G.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.